The big criticism institutions have is this thing doesn't produce cash flow. It's a pet rock. How is it worth $2 trillion? How is it worth $100,000 a coin? What I tell them is Bitcoin offers a service. The service is you can store wealth without a government or a bank in a digital format. And the more people who want that service, the more valuable it is. We're used to services having value, right? Microsoft offers a service. The difference between Microsoft and Bitcoin is you pay Microsoft a subscription for their service. You can't pay Bitcoin a subscription. If you want this service, storing wealth in a digital format without a government or bank, the only way to get it is to buy Bitcoin. If you do, you get the service. And the reason the price has gone from $1 to $100,000 is because at $1, no one wanted that service. No institution, no financial advisor, etc. No one wanted that service. Now Harvard wants that service, and Stan Druckenmiller wants that service, and the Abu Dhabi Sovereign Wealth Fund wants that service. The more people who want the service, when there's a fixed supply, the price goes up. The reason it's going to $1 million.
For over a decade, Bitcoin was the Wild West. It was the playground of cypherpunks, retail dreamers, and the occasional degen. But in the last 24 months, the gravity of the financial universe has shifted. We are currently standing at a psychological precipice. The question on everyone's lips is simple. Can Bitcoin break and hold six figures? While the crypto Twitter crowd oscillates between extreme euphoria and deep depression based on the daily candle, the smartest money in the room is looking at a much bigger picture. To understand where we're going, we have to look at the strange bipolarity of the current market. Matt Hougan points out a fascinating trend that emerged in late 2024 and early 2025. On social media, the sentiment was often dismal. Fear and greed indices hitting lows, people panicking that the top was in. Before we go on, just a quick reminder, liking the video, subscribing to the channel, and commenting helps this reach more people who care about Bitcoin and macro trends. Appreciate the support.
I think there's a question on whether we get above $100,000. I think there's some Bitcoin for sale around the $100,000 mark. So in the next week, I don't know. That's not to say it won't happen. I just say I don't know. What I do know is the things that are driving this rally, which I think is being driven on the Bitcoin side, not the meme side, the Bitcoin side, by primarily institutional capital. That's going to keep happening. A strange thing happened in Q4, which is I spent half my life on crypto Twitter, half my life speaking to institutions. On crypto Twitter, extreme depression, as you know, fear and greed at 18, people panicking, this will never get back on its feet. I would leave that space and go do these meetings, and institutional capital has just been strictly bullish. And I think a lot of what you're seeing is, institutions start the new year, they make new allocations. I think that's pushing it up. So short term, uncertain, as in tomorrow, the next day. But I think we're on our way to new all-time highs, certainly in the first half of the year, maybe early. So I'd be a buyer at these levels, certainly a buyer at any weakness, not investment advice, just my own personal view. So let me start with gold, because I think it paints a picture for Bitcoin. And then silver is the translation is it's altcoin season in metals. So we had the king rally in Bitcoin, and now people are moving down the metals, and eventually they'll get to like rhodium and shit, right? So silver is I don't know, Solana to Bitcoin's gold. But actually gold is like a great point. Here, what's happening in gold is really simple. The gold market changed in 2022. That was when Russia invaded Ukraine, the US seized Russia's assets, central banks around the world panicked. And you saw purchases by central banks go from 400 tons to 1,000 tons. So they grew 150%. And that was the only change in the gold market, was just central bank buying. But the important thing for Bitcoin people to recognize was the price of gold went up 2% in 2022. And then in 2023, central banks kept their buying at the same level, another 1,000 tons. So higher than 2021, but equal to 2022. The price of gold went up 10%. And in 2024, they kept it again, 1,000 tons. Price of gold went up 27%. And they kept it again in 2025. Price went up 67%. Wow. And that's the same thing that's happening in Bitcoin. In Bitcoin, the ETFs launched in January. They bought more than 100% of the supply. Price went up some. 2025, they bought more than 100% of the supply. Price went up and then went down. Eventually, what gold tells you is that the sellers run out of ammo. And that's when the price goes parabolic. So I do think gold has like shown us what's going to happen. It's just ETFs are behind central banks. There's been more selling than many people expected, but we're going to get to that parabolic blow off move if this buy side demand continues. I think retail has pumped silver. I think retail went altcoin on gold. I think they sort of missed the gold move until the very end, and then they rotated out into riskier assets like silver. The silver move is absolutely crazy, right? I mean, now it's $4 trillion assets. It's nuts. But I think mostly gold was just central banks, and then I think retail is driving this altcoin, alt metal, I should say. Boom. The big criticism institutions have is this thing doesn't produce cash flow. It's a pet rock. How is it worth $2 trillion? How is it worth $100,000 a coin? What I tell them is Bitcoin offers a service. The service is you can store wealth without a government or a bank in a digital format. And the more people who want that service, the more valuable it is. We're used to services having value, right? Microsoft offers a service. The difference between Microsoft and Bitcoin is you pay Microsoft a subscription for their service. You can't pay Bitcoin a subscription. If you want this service, storing wealth in a digital format without a government or bank, the only way to get it is to buy Bitcoin. If you do, you get the service. And the reason the price has gone from $1 to $100,000 is because at $1, no one wanted that service. No institution, no financial advisor, etc. No one wanted that service. Now Harvard wants that service, and Stan Druckenmiller wants that service, and the Abu Dhabi Sovereign Wealth Fund wants that service. The more people who want the service, when there's a fixed supply, the price goes up. The reason it's going to $1 million is because 95% of all the Bitcoin that will ever exist is already owned by someone, and 95% of the money in the world has no exposure to Bitcoin. It doesn't, like, those numbers have to even out, right? And that it's just so much money that has to come into the market. I think eventually the price goes up. I think it goes above $1 million eventually. Look, it's better than gold on almost every metric. I'll tell you the one thing that really resonated with the central bank, sorry to go on and on,
please,
is the fact that you can custody Bitcoin directly. We asked them where they kept their gold, and the answer was in London and in the US. That's great until it's not. A little gold history. In 1971, the US went off the gold standard. France sent a warship to New York to pick up their gold, and then the warship back, and then they blocked all their railways and had a special train. It cost like a huge amount of money and took 2 or 3 months. With Bitcoin, they could just push a button and have it. And that we call that self-custody, and we think of it as like the basics of Bitcoin. But to the central bank, it's like, whoa, that's actually better than gold. So I do think eventually it gets to be bigger than gold. It's just a matter of time.
One of the biggest criticisms from old school investors is that Bitcoin is a pet rock. It doesn't produce cash flow. It doesn't have a PE ratio. Hougan's response to these skeptics is brilliant in its simplicity. Bitcoin is a service. What is that service? The ability to store wealth in a digital format without the permission of a government or a bank. Think of it like Microsoft. You pay Microsoft a subscription fee for the service of cloud computing or software. You can't pay Bitcoin a monthly subscription. If you want the service of sovereign wealth storage, the only way to pay for it is to buy the asset.
So if you think of central banks as like the most institutional, buttoned up TradFi institution, you can walk backwards from that to insurance companies, to university endowments, to 401k providers, to private, family offices, to financial advisors. And when I started at Bitwise 8 years ago, financial advisors wouldn't touch crypto because of career risk. And what I've seen now is Morgan Stanley, the largest wirehouse, controls $10 trillion, is launching its own Bitcoin ETF. Right? I mean, I almost want to say you would get laughed out of the room at Morgan Stanley to suggest that 8 years ago, but you wouldn't have gotten in the room to get laughed out of it. They just wouldn't touch Bitcoin with a 10-foot pole.
Wow.
And so I've seen this career risk happen. The other thing, to say something that's obvious and dumb, is young people get older, right? The people at the wirehouses who are green lighting Bitcoin ETFs now were 27 and junior associates in 2017 when Bitcoin popped on their radar. It's just now they're 35 and MDs and they have more power. So the same thing's going to happen in central banks. It's just literally a matter of time, I think. I mean, crypto has the best demographics in the world, but it's dismissed as like degen crazies. But it's not. I mean, these are just like, it's just young, and these people grew up doing this natively. Of course, they're going to do it as they get older and wealthier. It's a huge tailwind. I think it's totally underrated. I think the 4-year cycle is dead. The reason I think that is the reasons that existed previously no longer exist. I think there were three. One was the Bitcoin halving, which of course still exists, but is half as important every time, right? We're producing 164,000 Bitcoin a year. That's not that much Bitcoin. If we cut it in half, it's 80,000. That's like, it's like a month or two of ETF buying. It's just no longer the big dog. The second one is interest rates, which spiked in 2018 and spiked in 2022. And there wasn't a 4-year cycle in 2014. It was the first time it would happen. It really repeated in 2018 and 2022. And I think the interest rate spikes were a huge factor. And then the third was blowups. We had a huge bull run to 2021. The market got frothy and FTX blew up. We had a huge bull run in 2017. The market got frothy. We got ICOs and they blew up. When I look at the market today, as mentioned, the halving is not important anymore, not as important. Interest rates are going down, not up. And blow up risk is so much lower because we didn't have the frothy buildup, and because regulation has made things like custody and trading and ETFs boring. So I just don't see why it would happen. Conversely, we have this regulatory tailwind that's like a 10-year force. We have institutional capital moving in that's a 10-year force. I think 2026 prints an up here. All that said, OG whales definitely contributed to selling in 2025.
Is that done?
And
like, how significant was that?
They're not selling out. That's the thing. I think they were just trimming because they made a lot of money, and $100,000 is a big round number, and they didn't want to suffer again through a 4-year cycle. But from our perspective, the people we talk to, they're not exiting the market. They were just trimming slightly. So I don't think it goes on forever. Again, I think there's probably somewhat more for sale at 100K, but I don't think it's people leaving the market. I think of it more as like going from 100% to 90%. They're 100% exposed to fiat. Like, people talk about diversifying your portfolio, right? Don't just own stocks and bonds and crypto and commodities, whatever. Don't just own one stock, own a bunch of stocks. If you're wealthy, almost the biggest risk to your wealth is that you're 100% exposed to the US dollar and the fiat system. So does that mean you need to be 100% BTC or 100% Zcash? No, but it means if you're zero, you're like leaving open a big flank, right? This is the world is crazier than it's ever been. There's a politicized Fed. There are reasons to believe that doesn't end particularly well. So whether they're worried about like a full-on collapse and buying the financial equivalent of a seafront place in New Zealand with a farm, they need some exposure to this just in case. That's been a story forever. People used to have Swiss bank gold accounts and stuff in the 70s. That was a big thing. Now it's Bitcoin, and yeah, they can self-sovereignly hold it, and no one can take it from them. It's amazing. Let's see. What is my advice? I think two pretty simple things. One is your biggest asset are not your financial assets; it's you. And two, find something that feels inevitable, but people are skeptical of. That's speaking my own career has sort of had 3 phases. One was biotech, 2 was ETFs, now it's crypto. In each case, it felt like an inevitable technology that people were skeptical of. And that's where alpha is. Like, all alpha is behavioral. And people who are older tend to be skeptical of new things. They're skeptical of what you're doing as the future of media, which I think it is. So find those things and lean into those things because that's where the alpha and exponential growth is from my perspective.
To wrap up, Matt Hougan's outlook isn't just about a number on a screen. It's about a fundamental shift in how humanity defines and stores value. $100,000 is a big round number that might cause some old-school whales to trim their positions, but it is not the finish line. We are moving from a world where Bitcoin was career risk to a world where not owning it is a fiduciary failure.